The Nasdaq leads the start of the Santa Claus rally on Wall Street as stocks close higher on Christmas Eve. The S&P 500 also turns positive for the month of December. Stocks in the Asia Pacific also trade largely higher. Markets in Australia and Hong Kong remain shut for the Boxing Day holiday. The GIFT Nifty is also indicating a positive start for our own markets. Crude prices rise about 1% on Tuesday, taking Brent to around $73 a barrel. Gold prices remain range-bound, around $2,600 an ounce. And the rupee continues to weaken for the sixth straight session, falls to a record low of 85.20 against the US dollar on Tuesday, pressured by a stronger greenback and higher crude oil prices. Good morning. It's Boxing Day today, the final expiry of 2024. There is a lot of action lined up through the day. You're watching Power Breakfast on CNBC-TV18 in the Mumbai News Center. I'm Hormuz Fatakia. Let's first take a look at how the Asian markets have started off, whichever are open, that is. The Taiwanese index trading with gains of around 0.2%. The markets in Hong Kong are shut today on account of a holiday, but the action, though, is coming from the Japanese markets. The Nikkei is trading with gains of around 0.5%, and that is because of the news reports coming in that the Japanese government is reportedly set to propose a record budget going forward in any time soon, and the yields have also risen there in Japan to around 1.07. So positive news coming in there from the Japanese markets, and they are leading the gains in the Asia Pacific. Pull up the GIFT Nifty higher, and that will also give you an idea of how the implied open. It was around about 60 points higher earlier this morning, and it's now come down to around 30 points. But mind you, volumes are going to remain lower today, tomorrow, and of course for the possibly the rest of next week as well. So you have to keep that in mind for the expiry session as well. For now, the implied open is suggesting a slightly positive start for our own markets. But how was Christmas Eve on Wall Street? It was a positive one. It was a half-day session, but mega cap tech stocks continued to lead the rally there as well. The Dow Jones and the Nasdaq both have now gained for the fourth straight session. The S&P 500 also now gained for the third straight session. Almost all of them gained close to 1% or just more than that. CNBC's Julia Burstein gets us a wrap of all the action on Wall Street.
Markets ended the shortened trading day in the green, squeezing out back-to-back gains heading into Christmas. The Dow rose 390 points, the S&P 500 gained 66 points, and the tech-heavy Nasdaq added 266 points. A group of banks and business groups are suing the Federal Reserve over its annual bank stress test, the process that forces banks to maintain adequate cushions for bad loans and dictates the size and share of repurchases and dividends. The Bank Policy Institute is behind the suit. It represents banks including J.P. Morgan, Citigroup, and Goldman Sachs. The complaint says the banks don't oppose stress testing, but that the current process produces changing and unexplained requirements and restrictions on bank capital. The Fed said earlier this week it plans to make changes to the process in 2025. And someone could get a big present this Christmas. The Mega Millions jackpot hit $1 billion ahead of its Christmas Eve drawing. That makes it the seventh largest in the game's history and Mega Millions' $7 billion prize. If somebody correctly picks all six numbers, it would also be the largest ever Mega Millions prize won in the month of December. There's been one other Christmas Eve winner in the game's history. That's what's happening here in the U.S. Back to you in Mumbai.
Let's also listen in to what Ed Yardeni of Yardeni Research and Paul Hickey of Bespoke Investment Group have to say on the markets and the factors that will drive growth going forward.
I'm expecting that this bull market will be increasingly driven by earnings over the rest of the decade. I think the important point about multiples is that, sure, they're impacted by interest rates, inflation rates, but I think first and foremost, they're impacted by the perceptions of how long economic growth is going to last, how long earnings are going to continue to grow. And I think that's why we have such high multiples here, is because the market's going to come around to our opinion that the resilient economy is probably not going to have a recession. That doesn't come with a money-back guarantee, Scott, but I think that between now and the end of the decade, the economy is going to continue to perform quite well. It would take a major increase in oil prices, I think, to cause a recession, and I don't see that. It would take a trade war similar to Smoot-Hawley, and I don't think that's where this is all going to wind up.
There's pretty much an even split what we look at right now. The the breadth in the market is good. Just overall, if you're betting against the market, you're betting against the prevailing trend. We're in a bull market 80% of the time, but breadth has been good. The AI trade, the AI stocks are doing well. The economy is doing well. There's concerns about the Fed becoming less dovish, but that's because the economy is doing well. And I don't think last week was much of a surprise when they came out. And I think part of the volatility we saw also coincided with the the hiccups in getting the continuing resolution done. Wednesday, right around the press conference, was when we started to see the deal break down in the Republican Party. Yep. And then Friday morning, I think it was on this show, you had someone on saying there was a breakthrough and they were coming to a deal. And then Friday, we saw the market rally again. So I think the Fed shouldn't be ignored, but also there was just concerns that the path may not be as smooth going forward. But overall, I think the election and the makeup in D.C. for the next 4 years is a pro for the market rather than a con.
That's all the global market action that we have, but how will all of these overnight cues impact our own markets? Our research team is joining in with the trade setup, the stocks that are likely to be in the news, and of course, the setup on the F&O side as well. First up, Vivek joins in to get all the market cues we need to watch out for. It was a truncated session, Vivek. Good morning to you first up. And how's the setup looking like this morning?
Good morning, Harmaz. Well, first up, we can't take any cues from yesterday. Most of the global markets were shut yesterday. So 24th trading session is where we are taking the cues from. 24th, like I mentioned, US markets had a truncated session, but a positive session. So some positive handover coming in over there. But on the other hand, when you're looking at crude oil prices, they actually gained on 24th, and they actually saw a bump up of almost 1%. So Brent now hovering around the $73.50 a barrel mark. But Indian markets a significant underperformer in the last trading session. Failed to hold on to opening gains, ends near the day's lowest point. Along with that, the Nifty also closed below 23,800 mark, and the heavyweights, especially Infosys, HDFC Bank, were among the key drags. Not only that, the market breadth too was very much in favor of the declines. Along with that, metal stocks, which actually rallied on Monday on hopes of a possible import duty cut, all of them reversed their gains, and so significant selling pressure. The only pocket of the market, or the only group that actually did quite well was the Tata Group, and this was an anticipation of a likely IPO coming in from the group in terms of the Tata Capital getting listed onto the exchanges. Siemens and capital goods stock did see selling pressure emerge. Siemens now down almost 15% in the last 3 to 4 trading session. Greaves Cotton, that was another stock that was in focus, gaining on the back of the likely IPO of its subsidiary. But overall, today morning, Asian markets giving a positive setup, GIFT Nifty 2 indicating a gap up start. Important to note whether that particular start that we might see in the green can sustain, and whether the Nifty can close in the green in today's trading session.
That's been the bigger question, right, all through the week and last as well, whether those gains sustain or not. Vivek, thanks a lot for that. Over to Abhishek now, joins in with the stocks that you need to keep an eye out for today. Abhishek, good morning. What's on the list?
Good morning, Homas. To begin with, Gland Pharma, the France Health Safety Body issue has issued about 10 observations for their manufacturing unit. EPAC Durable has clarified on reports of China company that is Hisen's plans to buy about 26% stake in EPAC Durable. They say that business discussions are in preliminary stage over there. Seagull India, their arm in Ludhiana, has actually signed a concession agreement with NHAI for 981 crore worth of project. Ramki Infra has got a letter of acceptance for a project which is worth about nearly 215 crore from Hyderabad, the Metropolitan Water Supply and Sewage Board. Amber Enterprise, they have issued clarification on CNBC-TV18's report of Amber Enterprise looking to demerge their electronics division. They say that the company has several subsidiaries and it keeps evaluating various strategic opportunities from time to time. As on date, there is no such event that actually has triggered a disclosure requirement for them. BPCL, they have emerged as the lowest bidder for 150 megawatt of solar PV power project of NTPC. The estimated capital outlay is about 756.5 crores, which can generate rupees 100 crore annual revenue for them. Nalco has signed a mining lease deed for Utkal D and Utkal E coal block to enhance their coal production capacity to 4 MTPA. Back to you.
Abhishek, thanks a lot for that. We'll keep an eye out on all of these names. And lastly, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. The 200 DMA is proving to be a very strong barrier for the Nifty.
Morning, Harmas. That's correct. So, for major part of the day, Nifty was around 200 DMA of around 23,840, but it failed to manage to hold on to the levels around that or above that, and at the end it closed with a cut of minor cuts. And for today, GIFT Nifty is indicating a start with a gain of around 30 points. But talking about because today it's the monthly expiry in the last two series, that is October and November, Nifty has seen a cut of almost 8%, and this month also in December, so far we are in the negative territory. So we'll have to see if we extend the losing streak or to turn positive. Now coming to the flows. On 24th, we saw FIs selling more than rupees 2,400 crore in the cash market, but DIs have bought more than rupees 2,800 crore. In the derivatives market, too, FIs sold more than rupees 1,000 crore, and they have reduced long positions by 44,000 contracts, but at the same time, they have also reduced short positions by 28,000 contracts. And with this, FIs long exposure now reduced to less than 24%, which is lowest in since November of 18th. And on the client side, long exposure remains healthy. It's at 65%. And on the option front, 23,850 call has seen addition of nearly 8 lakh shares, and 23,700 put has seen addition of more than 11 lakh shares. Important levels for Nifty, support remains around 23,550 and resistance here 23,850, that is around 200 daily moving average. 4 stocks have come out of ban. Those stocks are Bandhan Bank, Granules, Hind Copper and Manappuram Finance. So keep an eye on these stocks.
Sudarshan, thanks a lot for that. And since Sudarshan was mentioning that the Nifty needs to turn positive for the series, 23,914 is that level that the Nifty has to cross to turn positive for the series this time around. Well, time for a short break. Up next, we get you all the key highlights from the RBI's December bulletin that was released on Friday. Stay tuned. We'll be back on the other side. Welcome back, and moving on to action from the currency market now. The rupee hit yet another record low on Tuesday, crossing that 85.20 mark against the dollar. Now the currency extended its decline for a 6th straight session, depreciating by 9 paisa. Now the drop was attributed to a robust dollar, higher crude prices and a weak domestic equity market. So it is the losing streak continues for the rupee. 85.20 now is that level that the index had hit on Tuesday. Well, but moving on, then the government announced the appointment of Arunish Chawla, an IAS officer, as the new Revenue Secretary on Wednesday. Then Arunish Chawla will succeed Sanjay Malhotra, and the post of the Revenue Secretary fell vacant after Sanjay Malhotra became the new governor of the Reserve Bank of India earlier this month. Now Arunish Chawla will continue to hold the additional charge of the Secretary till the appointment of a regular incumbent. Well, the RBI released its December bulletin on Friday evening, which contains a much needed watch on the state of the economy report. And Lata is here with the key takeaways. Lata, good morning.
Oh, well, good morning. The RBI bulletin every month has a state of the economy report, which all of us read with great interest. The market reads it to see if there are any rate cut signs. But on the month when the monetary policy is announced, it was announced on December 8th after all, there isn't so much change by the time you come to December 24th that things should change much. But nevertheless, because of this expectation of rate cut, everyone was watching. Now, what was the key thing that we got is actually a downgrade of growth. In the December 8th policy, the Reserve Bank had brought down the growth forecast for the current quarter from the earlier 7.4 to 6.8. And for Q4, they had kept it at 7.2. Now we are seeing a downgrade. They maintain that Q3 is going to rise to 6.8 from the earlier 5.4. But Q4 GDP, they have lowered the forecast from the earlier 7.2 on December 8th to 6.5. So now if you take the average of the 4 quarters, what you get for the full year is a 6.4% growth. In the December monetary policy, they had forecast 6.6%. So clearly, they have brought down the Q4 forecast. There isn't much of a change in the inflation numbers, except to say that the Reserve Bank is seeing greater fall in vegetable prices, especially tomatoes and onions, in the month of December, which, of course, had contributed hugely to inflation. They also point out to rice prices falling a bit. Therefore, chances are, if you read the growth softness and the bit of inflation softness in December together, the market is reading it, some in the market, not all of them. There isn't any clear interest rate clue, but some in the market are reading the softness in inflation and softness in growth to mean a possible February rate cut.
Interesting, and a lot of people on the street are definitely anticipating one. Lata, thanks a lot for that. Well, time for a short break. Up next, we get your cues from the commodities market. Stay tuned, we'll be right back. Welcome back. Now, 2024 has been a year of heightened regulatory scrutiny for India's financial sector. From fintech heavyweights to traditional banks and microfinance institutions, the Reserve Bank of India took action against a series of lenders and financial entities, signaling a firm stance on regulatory compliance. CNBC-TV18's Ritu Singh has the highlights of what has been the year of the big regulatory crackdown.
2024 was a year of reckoning for the financial sector. The Reserve Bank of India took unprecedented action against various financial entities, signaling a shift towards stricter compliance and consumer safety, and driving home the message that abiding with regulations is non-negotiable. The ball was set rolling early in the year with action against Paytm Payments Bank. The RBI barred the bank from onboarding new customers or accepting any deposits, effectively shutting down the payment bank's business. It based this action on repeated non-compliance by the bank with KYC norms and governance deficiencies. But it wasn't Paytm Payment Bank's first brush with the RBI. However, this time, the central bank had run out of patience.
Such restrictions which we impose are always proportionate to the gravity of the situation.
In March, two firms, IIFL Finance and JM Financial, faced business restrictions. IIFL, a key player in gold loans, was restricted from issuing new loans because of violations in gold valuation and loan-to-value ratios. For JM Financial, the offence was governance lapses in financing IPOs and bond subscriptions. In April, Kotak Mahindra Bank was ordered to halt onboarding new customers through its online channels and suspend new credit card issuance because of weak IT systems. And the crackdown extended to microfinance as well as new age lenders. In October, RBI barred 4 non-banks, DMI Finance, Ashirvad Microfinance, Navi Finserv and Arohan Financial Services from sanctioning and dispersing new loans, citing excessive pricing practices and non-compliance with regulatory guidelines.
We found a number of NBFCs charging exorbitant interest rates.
Right.
Interest rates going up to 40%, going up to 45%. Now, and who is the borrower? The borrower is he is a man of small means.
Right.
And these are not well-off sections of society.
Restrictions on one of the NBFCs, Navi Finserv, were lifted in a little over a month, on IIFL Finance in 6 months, while those on JM Financial products were in place for 7 months. The others, however, are yet to free themselves of regulatory embargoes. So why this sweeping regulatory action?
The Reserve Bank has taken up this as one of its focus areas to create awareness as well as to ensure adherence to good corporate governance practices.
The RBI's tough stance has been met with praise and criticism. Some quarters allege it is being overly punitive, especially towards fintechs. For instance, soon after the action against Paytm Payment Bank, a dozen startups penned a letter to the government arguing that such measures could stifle innovation and hurt the broader fintech ecosystem. RBI says the numbers don't support this argument.
Out of over 150 banks, over 9,000 non-banking financial companies, about 1,500 UCBs, and various other entities that we supervise, stringent actions have been taken only in a handful of cases.
RBI believes these actions will serve a dual purpose. One, it's a signal that the cost of non-compliance will be too high to ignore. And two, it promises consumers greater transparency and protection. For financial entities, this is a wake-up call they cannot afford to ignore.
What is becoming increasingly evident is that this is a new, stricter, no-nonsense RBI that expects and demands compliance with its rules and regulations. And while it is willing to give financial entities time to get their house in order, its patience is not endless. In Bengaluru, Ritu Singh.
Ritu, thanks a lot for that. Indeed, it has been a year of the regulatory crackdown. Now, a passenger plane flying from Azerbaijan to Russia crashed near the city of Aktau in Kazakhstan on Wednesday with 62 passengers and 5 crew members on board. Now, the crash has reportedly killed 38 passengers, while 29 of them have survived. Now, authorities in Kazakhstan have launched a comprehensive investigation into the crash, examining possible causes such as a technical malfunction. Now, Azerbaijan Airlines said that it was suspending all its flights from the capital city of Baku to Russia's Chechnya region until the investigation is concluded. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you tracking today?
Well, thank you for that, Hormuz. It's thin trades clearly, and many people have gone for vacations. But even in this market, we're looking at a bit of a gains continuing in for many of these commodities. So you have the crude oil prices trading in the positive in Asia right now. The US data has indicated a strong consumer trend. And when you look at the India crude oil imports for the month of November, that gained up by 2.6% on an year-on-year basis. So that has led to some buying. Gold prices also have been supportive. A World Gold Council report says that the central bank demand has been strong for this quarter as well. Remember, the gold prices have gained up by 27% in this year, and this has been the best year since 2010 that we've seen it for gold prices. And in these twin trades as well, one commodity that has continued to gain weight strongly has been the U.S. natural gas prices. It's now trading at a December 2022 highs. And overnight, even as the markets have been very thin, we've seen 5.5% of gain come in for the natural gas prices, now taking the gains to around 68% for 2024. So clearly, one of the best performing commodities continues to be natural gas for 2024.
Natural gas is stepping on the gas. Manisha, thanks a lot for that. With that, it's a wrap on this edition of Power Breakfast. The Boxing Day test continues at the MCG, but it's also the final expiry of 2024, and Bazaar Morning Call comes up next to set you up for just that.